Hi everyone, it's Igor from Bouillon here. Today we'll be looking at some of the biggest semiconductor companies in the world and which of these companies I'm personally holding and buying, so which companies I like a lot and which companies I'm actually still avoiding. So we'll just look at briefly at the following companies: Nvidia, Taiwan Semiconductor, Intel, Advanced Micro Devices, ASML, Qualcomm and Broadcom. So all of these companies are listed and you can invest in them if you want to. With today's day and age and the access to markets, you can find them on Robinhood, on Velocity Trader, on Easy Equities, on eToro. So they are out there. So why I like the semiconductor space so much is because I believe for the next decades to come, it will still be very, very relevant and important to the world, as these microchips are actually used in so many important aspects of our lives. So it's used in smartphones, in cameras, in televisions, in washing machines, in fridges, in electric vehicles, in some equipment. So it is everywhere. And that's actually why we've been experiencing a global shortage of semiconductors. The reason for that is it's because it's in a massive demand. With everything that's happening so fast, technology movement, the electric vehicles and wherever we are moving towards, in today's day and age, semiconductors are extremely important. And as we're going to go through these companies, you'll see some of them are already really, really, really big. So this is a massive space and I'm happy owning it for the next few decades. So I am also biased. Take that as consideration. This is not financial advice. I like this space, so always do your own research. This is just for you to, see the research that we've done and also what I like of these companies. So let's dive in. First, Nvidia. We'll start off with that because I'm the most biased for Nvidia. It's had an amazing run. I first bought Nvidia back in 2014 when it was around $36 a share. It is now $790 a share. So I've personally seen the gains there. That's why I probably like it so much. But the reason why I bought it was, semiconductors are essential and the management has done amazing so far. So Nvidia is a graphics chip processing manufacturer and currently generates the majority of its income from graphics processing units, so GPUs, which is used for gaming and crypto mining amongst others. So gaming is also this booming industry and people love their games. So the company is also currently seeing a sharp gain and increase in the share price as they are in talks to acquire the UK chip designer, ARM. And ARM is also a massive operator in, if you want to call it, artificial intelligence. So if this acquisition goes through, it's going to be big for Nvidia. And we're going to see something big. It's still going to play out and we're going to see if there's no monopoly concerns or whatever. And so the bottom line is, if it goes through, the acquisition, I believe it's going to be great for Nvidia. A massive addition as ARM is also big. The share price, $790. The current year-to-date return on the share price is 52%. So that is from January up until now. 52% already, and it's only July now. And that is awesome. So it has had a nice run. It could be seen as a bit overvalued at this moment, but I think people are pricing in the ARM acquisition as successful for Nvidia, and that's probably why I've seen this run. It's part of the future of what Nvidia is going to become further. Their Q1, so their quarter revenue, the first quarter revenue for 2021 was $5.6 billion. So that is big. It is still up 84% from Q1 2020. So we are seeing massive revenue increases still from this big company. The Q1 2021 net income was $1.9 billion, up 110% year on year, 109% year on year to $1.9 billion. So that is big, and they're making amazing, profits from, if we look at the overall picture. Revenue of $5.6 billion Q1, but the net income at just around $2 billion. So it's looking good. The market cap is around $500 billion at the moment. So if you look at the price to sales ratio or whatever ratio you want to look at, it's probably going to look expensive. So that is something to consider. I'm not going to buy more Nvidia at this current levels, but I am holding on to mine, and with any dips, I'll probably look to add more. Taiwan Semiconductor, this company is one of the largest in Taiwan, and it also manufactures microchips used in the smartphones, radios, medical equipment, and more. The company manufactures chips for companies like Apple and Qualcomm, so those are some of their customers. The share price is now around $118. The year-to-date return is 6%, so that's very modest if we look at Nvidia's return of 52%. So it is quite, 6% is still good for 6 months, but it's below Nvidia. The Q1 revenue for 2021 is much larger than Nvidia. It's at $12.9 billion, but it's only up 16.7% year on year. So where Nvidia made an increase of 84% in Q1 2020 to Q1 2021, 84%, where Taiwan only made 16.7%. So the revenues are bigger, but the growth is lower. The net income of just below $5 billion, so that is also quite healthy. Up 19.4% year on year. So they're also making increases, but not as much as Nvidia. And that's probably why Nvidia is priced in at a more overvalued valuation if you look at the current standings. The market cap for Taiwan Semiconductors is around $563 billion. So it's also bigger than Nvidia. Revenues are bigger than Nvidia, but growth is slower than Nvidia. If we look at Intel has been the dog the past 2 years in this space. Intel is still making the most revenues, but the revenues are decreasing. You'll see that now. So the share price for Intel is currently around $57. The year-to-date increase is actually 13.6%. So there is an increase, but now to the real deal, the financials. So the Q1 2021 revenue was just below $20 billion, but that is down from actually the previous year. So where all the other semiconductors made increases, Intel actually did a decrease. So it's just a little bit down, but it's down, and that's the bottom line. Where the other semiconductors are actually growing their market share and growing revenues and growing profits, Intel is actually decreasing. Their Q1 net income for 2021 is $3.7 billion. So they are still making a net income, which is good and not a net loss. But the revenues are decreasing, and the net income also decreased almost 50% year on year. So Intel is struggling. There's new management, or they're getting new management on board and new plans that they want to disrupt again. But we'll have to see on the execution. The other companies are actually showing Intel some, they're leaving Intel behind. The market cap is now around $232 billion. So the market cap is lower than the previous mentioned, but their revenues and net income decreased. So that's probably why we're seeing the lower valuation there. Then another one I really like. At the end, I'll say my favorite too. But I like Advanced Micro Devices, AMD. And we've actually written a stock pick on the FinMeUp Telegram group. And you can actually join on the link in the description. We'll put the links there to the community groups for more exclusive content like these on a daily basis. So AMD specializes in chips for computer processing, but also produces flash memory, graphic cards, and more. Their CEO is awesome. Just go check her out. She is so ambitious, but even when she speaks, it's just that confident sense, and they are really disrupting and really doing well as a company overall if you look at their financials. So if we look at the share price movement this year compared to the financials, there's actually, I think I'm going to buy more Advanced Micro Devices, and I'll tell you now why. So the year-to-date increase of the year-to-date share price actually decreased 5.6%. So there's a decrease in the share price. But look at the revenues in Q1. Q1 2021 revenue, $3.45 billion. That's up 93% year on year. So that's around the same growth as Nvidia. And their net income for Q1 was $3.7 billion. So they're also making nice profits. But that's Intel. Their net income was $555 million. So it's a bit lower than the others. But I mean, it's still a smaller company if you look at the bigger picture. Their valuation is also lower. So the net income is lower, but their net income growth in Q1 year on year was 243%. So AMD's revenues are increasing, their net income is increasing massively, but their year-to-date share price is actually down. Their market cap, so their valuation is now around $105 billion. So at the moment, AMD actually looks quite very promising for myself. I actually own AMD shares personally, so I'm also a bit biased, but I do believe in this company, in the management, and the way they are growing their operations. They've actually also announced a share buyback recently, so that just means that the management is confident in the company and they are willing to buy back their own shares, so they believe that, the share price is going to be more in the future. So this is one I'm willing to hold for the next few years and buy with any dips. I'm actually buying more now in this period. With any more dips, I'll probably look to add more. Then the fifth one, ASML. It's probably not one that everybody hears of every day. They are operated mostly from the Netherlands. ASML does not actually produce chips, but rather the machines that produce the chips. So that's a bit of a diversification play in the space. But ASML is actually also a great company in my opinion. The share price is around $700. Year-to-date performance also very nicely, 41% growth from January to now. Q1 revenues, $4.4 billion. It's expected that the revenue growth for the entire year, 2021, will be 30%. So that's also, quite decent. Also slower than AMD and Nvidia, but, it's also a great company if you look at the bigger picture. Their market cap is also lower than Nvidia's. So the Q1 revenue was $4.4 billion. Q1 net income was $1.3 billion, and the market cap is now around $300 billion. So, as we go through these companies, you'll see all of them are billions of dollars. So it's a big industry and it will continue to be big. And then, we're going to Qualcomm. Qualcomm creates semiconductors, software, and services related to wireless technology. Qualcomm also owns critical patents related to 5G and 4G standards. So Qualcomm is more a 5G play. If you really believe in the 5G revolution, if you want to call it that. The share price is currently $138, year-to-date increase of 9.3%. Revenues of just below $8 billion at $7.9 billion for Q1 2021. Also up 53% year-on-year. The Q1 2021 net income is $1.76 billion, up 277% year-on-year. So net income also skyrocketing, revenues growing. And lastly, we get to Broadcom, formerly known as Avago, I don't know how to pronounce that. Broadcom is a developer, manufacturer, and supplier of semiconductors in the networking, software, and storage and broadband spaces. So also a bit play on the 5G. The share price $468, year-to-date increase of 7.19%. Q1 2021 revenue $6.65 billion, up 14% year-on-year. And the net income at $1.37 billion. So those are 7 companies in the space. So now to the bottom line of my favorite companies of all these. So first to the ones I'm avoiding. Firstly, I'm avoiding Intel. Intel is for many a value play at this moment. The reason for that is, they are still the biggest revenue maker in this space. But, they're seeing a decrease in their revenues and in their net income. So I don't really know if I want to catch this falling knife yet or not. It's not a massive falling knife, but, they are decreasing and they'll still be big in 3 years' time. But I'd rather invest in something that they're executing. And, Intel are making some changes in the company, working on new products, some management changes and all of that. So, if they manage to swing this, it could probably be a good value investment for those looking for value investors. For those looking for more high growth and disruptors and those who are executing currently, my favorites are Nvidia and Advanced Micro Devices, and also a bit of ASML just for a diversification play. Because they actually produce the machines that produce the chips. That is ASML. ASML and Nvidia, which is part of my top 3. ASML year-to-date increase was 40%, and Nvidia, that was a 52% year-to-date share price increase. So we've seen the returns this year so far. So it could be seen as a bit overvalued at the moment and probably be due for a bit of a pullback and dip. There I will be looking to add more. I currently don't own ASML, but with any dips I might look to add some. Nvidia I do own. I've been owning since 2014. I will continue to own, and with any dips buy more. But AMD at the moment is the most attractive for me. I also own AMD. I am buying more. The reason for that is, we are seeing this revenue increase. We are seeing net income increase by massive figures. The market cap is still only $105 billion. The CEO is amazing from my personal opinion, but the year-to-date share price has actually been decreasing, and they've announced a share buyback. So those are all factors that is giving me a confidence booster in actually going out and buying more AMD shares. Let us know in the comment which semiconductor companies you personally own or like. Comment those. And if you actually don't own any, which are you looking to buy if you are? If you are still staying away from the space, because it's been a hot industry. We've seen some nice returns so far. But let us know what you think. If you found this useful, please like and subscribe for more videos like these. Hope you have a great day. Remember to join the community groups in the description for more exclusive content on the FinMeUp groups. Have a great day. Cheers.